tell us why Bitcoin. Tell us a little bit about the problem with the debt spiral, inflation, and why
Yeah.
we need Bitcoin.
So the debt spiral is really it. We're Our foundation has been changed. We're now the entire financial system of the world is built on debt, borrowing, extracting future value into the now. Now, debt in and of itself is not a bad thing. If you want to do something and you want to be productive, you may not have enough money to do that now. You may have to go get so say you want to set up a business, say you want to set up a restaurant, is the example I often use. And, you've got $10,000, but you need $100,000 to open this restaurant in order to, get the space and it's actually this day and age would cost a lot more than that, but let's just pretend. You get the space, you get the cookware, you get you build it out, you hire people, you start paying salaries, you get the food, you start making the food. You need a lot of money up front to do that. If you only have $10,000, well, maybe you can go get a business loan, a small business loan to open that up. Well, what you've done is you've borrowed effectively the rest of that money, the $90,000. And now, but you're out there, you're being productive. You've bought things, you've built things, you've hired people, and now you're making food and selling it. You're generating now profitability, gross domestic product. You're generating, productivity. So as long as you do it in a way that is responsible, it can be very useful. We all use debt. I mean, this day and age, I would not be the one loaning people money at the current rates because I know long-term inflation, you're going to get roasted and you're going to lose. So you want to be the one borrowing. What is the U.S. government doing? They're borrowing massive amounts of money. Okay, so but they're doing it irresponsibly. They're way over their ski tips. Now the U.S. as of yesterday, they borrowed $204 billion in the first day of this fiscal 2025 year, and just saw that last night. Insanity. 300 something billion dollars in just a few days. Absolute madness. They're running multi-trillion-dollar deficits at a time that we're not even in a recession. So this is just completely irresponsible, reckless spending coming out of DC. There's just no other way to put it. Okay. Now, but to put numbers around it for people to understand and why this matters, if you're a company on the New York Stock Exchange and you can't generate enough income to cover your interest expense and you have to borrow in order to cover that, you're called a zombie company. You're a dead man walking. So the United States is effectively a zombie company if it was on the New York Stock Exchange. The difference is we can print our own money, which we'll get to in a minute. Companies can't print their own money. So that's why they're not a zombie company. They're kind of just a zombie country, and we're just continuing this charade. What's the charade? Well, if you look at the Congressional Budget Office, the line items and what we expected to spend, we're going to get all the facts and figures out in the next month or so of exactly what we spent and exactly where all our money went and how much we took in. But just using the numbers that they projected this summer, we projected, and I'm off the top of my head, we projected to spend $6.9 trillion, right? And that's all the expenses we have in the U.S. government federally. And we expected to take in $4.9 trillion of tax receipts. Okay, so now you're talking about a $2 trillion deficit. Okay, so where can we cut? So the thing is, the problem is, Paula, is that we spend money on things that are unnecessary. That's part of the issue. But the problem is, we have mandatory expenses that completely overwhelm our tax base. So what do I mean by that? Well, our mandatory expenses, if you go through them item by item on the mandatory expenses, you've got things like Social Security, Medicare, and Medicaid, right? If you look at all of those, They add up to roughly $4.1 trillion, right? So Social Security, Medicare, Medicaid, $4.1 trillion. Then you've got defense spending. Those are signed into legislation. They're in law. You've got to pay them. If you don't pay them, you're defaulting on your debt really bad. Then the second item you've got is defense spending, which is somewhere around $950 billion that they said. I think it's close. It's over $1 trillion. They're places that they're pulling money from and sending to Ukraine. Who knows how much they're even attributing to defense spending at this point? Is that defense or is that aid? What is that? I don't know. But defense spending is about $950 billion. Okay. So now you're at $5 trillion. Okay. So you're already spending more than you're taking in right there. Those two line items between Social Security, Medicare, Medicaid, and defense, you're already at $5 trillion. You're overspending. But then we've got our interest on our debt, and the net interest on our debt is about $1 trillion. It's 900 something million dollars. That is all the interest expense that we have on the debt that's out there, the $35 trillion of debt that's out there, 35.6 trillion, minus the interest that we get back from intergovernment loan, the debt, right? So you've got intergovernment debt. So it's basically just paying yourself interest. So they net it out, and it's about $900 billion. So now you're at $6 trillion. Then you've got discretionary spending of another $1 trillion. Now you're at $7 trillion. So your deficit's over $2 trillion, $2.2 trillion. We don't know the exact number yet, but I think it's going to be close to $2.3 trillion. Okay, so what do? You can either cut expenses. Where are you going to cut it from? You can cut all of the expenses out that are discretionary and you're still underwater. You can cut all of the defense spending, but with interest, you're still underwater. So you're going to have to do, even if you could cut it all, and even if you got Congress all together and said, we're going to cut expenses, it's political suicide. Neither party will do it because it hurts their constituents, hurts them, right? They need to keep the gravy train going for their constituents, the people who vote for them. And so they're just going to keep spending. There's no real incentive. They try to trick each other every few years with the budget deficit and the budget battles and the debt ceiling, which we're going to see again here in January, but nothing really happens. So what's the second thing you do? You could raise taxes. If you've ever seen something called the Laffer curve, this is Arthur Laffer who created this something called the Laffer curve, and it was a big part of Ronald Reagan's platform and cutting taxes. And so what happens is in the Laffer curve, you see taxes go up. As you raise taxes, the tax income goes up, meaning the taxes that the government gets goes up as you raise them, and at a certain level, it stops going up. As you raise taxes up to a certain level, it stops going up. It starts to go down. Why? Because productivity goes down. You're disincentivized to be more productive. Not just because, I don't want to pay taxes, I'm not going to work. It's because you don't have the extra capital to put into productive lines of the goods that you're making, productive lines of business. You can't put money into research and development. You can't hire people. You can't raise wages. So all of this starts ebbing and you go down. So now you have declining productivity and you wind up getting to the same spot of higher taxes on lower productivity. But the problem is now you've got declining productivity. So it's even worse. So that doesn't work. So what's the third thing you can do? Well, the third thing you can do is just borrow more, just issue more debt, which is what we do every single year. Here's the caveat though, because like I said before, we're fiat based and we issue debt in our own currency. What we do is we allow for inflation, and that because we print money continuously, whether it's through deficits or it's through central banks monetizing debt, or it's through just sending people stimulus checks, we print money. And so that inflates the money supply, which devalues the dollar. And so as the dollar debases, it makes that debt that you pay off, you pay that former debt off with cheaper dollars in the future. So as long as those dollars are debasing faster than that annual interest rate you're paying on your debt, then you're making out on that deal because you're loaning money at an interest rate that's lower than the inflation rate, the true inflation rate. And so it's a negative real return for the investor in the bond, and it's positive for the person who's doing it. So it's positive for the government because they're paying down the debt with cheaper dollars. And that's the game. And we're going to continue doing this. The only problem is now we're paying so much for interest expense, and our deficits are running so high that we have no choice but to keep borrowing more. And as we borrow more, interest expense goes up. Even when the Fed pulls interest rates down here to 3% this next year, our deficit's still growing because our interest expense is still growing right through that, because as these bills, that the average debt comes due and matures, we have to issue more debt. And we're issuing it at a higher interest rate, even at the longer end of the curve. So interest expense is still going up, and that'll continue for a few years here. And even if we go back down to zero eventually, it's going to continue for a while here. And our deficits are still rising at the same time that we're having to have larger payments of Social Security, Medicare, and Medicaid. And these are bills that are coming due, and you're getting more seniors and more boomers who are retiring early. We saw a ton of them retire early the last couple of years, and they're still doing it. And so the cost of living adjustments are going up. The Social Security, Medicare, Medicaid payments are going up. The Social Security fund is being depleted. By the time I retire, there's going to be nothing in it. There will be nothing left for me, even though I paid into it all these years. I'll have paid into it for 40 years, and I'll get nothing out of it unless we do one thing: print more money, borrow more money, just tack it onto the bill and make the future generations pay for it. And so what's happening is it's a debt spiral. So you have to borrow more to pay more, to borrow more creates larger deficits, to borrow more to pay more, and it's spiral. And everybody knows it. It's confounding that we're not talking about it on the presidential debate stages. It's absolutely mind-boggling, but everybody knows it. We have certain congressmen and senators who talk about it. A few of them that are in the Bitcoin world, like Senator Lummis, they talk about it. And, John Deaton, who's taking on Elizabeth Warren up in Massachusetts, he's talking about it. But there are not a lot of, and Kennedy is talking about it. Senator Kennedy's talking about it. But that's it. There's a handful of people. But everybody knows it. And when I mean everybody knows it, I mean everybody knows it. Janet Yellen has said it's unsustainable. This path is unsustainable. We have to cut our spending somehow. We've got to stop. We've got to figure it out. We've got to balance the budget. She said it. Powell said, I don't comment on the Treasury. It's not my place to tell them what to do. It's not my place to tell Congress what to do. My job is to keep the monetary system going and keep confidence basically in the US dollar is what his job is. He doesn't say it as much, but first principles, that's his job. Okay, so and we can talk about what the mandates of the Fed are separately. But the issue here is that they know it. The Treasury knows it. Not just Janet, but the Treasury knows it. They put out a report that shows, the Congressional Budget Office shows it. They put out reports that show that the debt to GDP is moving up exponentially. In the future, starting now, it's just going up exponentially, and they know it. And they put out a report that's it's subtitled "An Unsustainable Fiscal Path." The Treasury themselves put this out for the whole world to see. It's on a graph. And then the CBO says the same thing. They show this report of debt to GDP just rising exponentially. And here's the crazy thing about it, Paula, is that the CBO, and they're all using numbers and assumptions that don't take into account high inflation. They don't take into account any higher deficits. They don't take into account recessions. Like as if we're just going to keep going on forever without any recessions. The only way we're going to do that is if we keep printing more money. And so we're just going to keep printing more money, making inflation worse. So this is the whole point of talking about this. This is not about doom and gloom. This is about waking people up to understand that we are in a debt spiral, and the only way that our leaders are going to handle this is by expanding the money supply. Fiat must be expanded. It's the basis of all this debt, and it must the show must go on. And they're going to keep printing money, which means that you need to have protection for yourself against that. And that's the point of all the things that we talk about. So it's not doom and gloom, but it's a warning sign that this is not stopping. And unless we see some sort of resolution here and a change of heart of everybody in the world that we're going to be responsible now, which I do not expect, then the answer is to own things that are hard assets, hard monies, gold, silver, Bitcoin, real estate. Own things that cannot be debased. And that's the point.